All right, good morning, guys. Sorry, I was gonna answer the questions that came about a day or two ago, right? But I just don't want to flood our private group with chats right now, since I've just asked everyone to have a look at this video. It's a 2-minute video on just the remote course and who's in, who's out, et cetera, because some people are experiencing issues. So please, I don't want to just start loading chats and then confuse people. And then I realized that the chat question that you guys asked me about 24 hours ago, 2 days ago, etc., GBP pairs, Nasdaq gold, and CAD JPY, they actually won't take too much time. So I thought let me just do a video around it, a short video around it. And let's start with, so I'm going to start with Ronald. Ronald, I'm going to start with you, buddy. All right, Nasdaq and gold. Just going to do those two charts, stop the video so it's not too long. Then I'm going to do another video answering Mr. Kakoma on CAD JPY, although I think I did send a message in the private Telegram group a couple of days back explaining why. And we did cover a little bit about, around this pair in our war room. And then I'm going to look at pound pairs for Mr. Lima Paul. Right, so Nasdaq. And I want to be as realistic and as fair as possible. So I know Ronald literally said on the 27th, right? So he was looking at markets, I believe it was the 27th, and he was, I don't know, markets have been on unforgiving. Nasdaq there, 27th, right? So even that sell on Nasdaq on the 27th, British and Garfield would have kicked me out and hit my stop loss. There was a longish week, almost a spike, right? So let's start off with Nasdaq. And I love these type of questions, guys. And if this is how you guys want to make use of the group, please just highlight specific questions, specific charts, and then we just keep doing the drills, because that's all it is. So we know that there's an Evergrande crisis. The crisis is quite bad. I mean, I don't want to waste. Like I said, I want this to be short, straight to the point videos. But there's a terrible crisis in the market. So this is the 27th. All right. And I'm trying to understand, Mr. Marks, how this would have bothered you, sir. Because last night when I was half awake, half sleepy, I just automatically assumed there was maybe an original turn. But when it comes to the Nasdaq here now on the daily time frame, right? So I'm just trying to remove all the noise. You guys have taught, all of you. Some of you are obviously in module 1, so you're still learning. But the people I'm answering questions, you know exactly what my horizontal lines indicate, right? These are company stocks, so these numbers are very important to us. So look, man, there was let's track it. Let's track it. So this is a buy profile asset in general. It goes up, it turns once in a while, it goes up, it turns, and it goes up. Now look at this pattern here. It went up, decided to stop at 15,700. There's no issue there. At some point in time, I don't remember which war room it was, there was 1 or 2 buys we took at 15,300. That much I remember. And at the time when we're taking the buys, my hope was it was like the swing off, or swing of a lifetime, like what, because right now I've been looking for an entry to hold till December. And now every time I take a buy, I'm going to try that. I'm going to try and hold it, right? And then the Evergrande crisis came, and I'm like, damn. Okay, so that buy idea, the long-term swing buy, is kind of like off the window, right? But we're going to get a cat, what we call a cat bounce in the market. A cat bounce, you know, if you ever thrown cats off a window, okay, please don't throw cats. But when a cat is thrown off a building or off a roof, it lands on the tip of its toes, called a cat bounce. And a cat bounce will look a lot like this. The market will drop into a zone, and then all you'll see is a wick, a pushback. And this green candle today on the daily is a reflection of the fact that today is the last day of the month. I'm going to come back to the 27th. Today is the last day of the month. Markets are bouncing off at 14,800. Look at the governing time frame. The markets have 24 hours. 24 hours to decide what we're doing. Is Evergrande going to affect us long term? Is it a problem to deal with short term? Why? In the next 24 hours, or not even 24 hours, it's already like 8:30, right? So markets have got however much time is left, about 16 hours left to decide if they can close above, preferably above 1,500. Markets have to decide if they're going to close the daily candle above 1,500. Right, and it's like a rough estimate. It doesn't have to be round about there. It could be just anywhere above this green candle. See where this green candle closes at 49.81, above it. Because markets don't do that, which is a lot of work to do in one day. And one terrible headline on the Evergrande crisis will make that impossible. If the markets don't push all the way up there, then we have a bearish engulfing candle on the governing time frame. And that becomes a problem because look at your Nasdaq on the governing time frame. 365 candle, bullish engulfing, not a bearish engulfing candle. Complicated 365 candles created a demand. There's not a bearish engulfing pattern. Complicated 365 candles and created a demand that markets rose. And do you know what these complicated 365 candles are? This is February, the 3rd of February 2020. This is COVID. So look at the scare in Nasdaq when it comes to COVID. The scare in Nasdaq when it comes to COVID, when it came to the richest people in the world, the massive, the Nancy Pelosi's who were literally fighting tech giants to push price down, literally in the middle of Trumping, which was literally at the beginning and in the middle of the COVID crisis, they were not scared. There was no bearish engulfing pattern. This was a PCP. We know what we do with our PCPs. A PCP fell into a PCP that fell into, look at this short, tiny bearish engulfing pattern. Look at how it was bought back, retested, bought out, filled out, and then markets left. That's what we're dealing with right now. So if this becomes a bearish engulfing pattern, we have problems because then we know markets long term might actually want to dip a little bit further to the downside, right? And what could happen is, first of all, right, tomorrow is October, markets could do something like this, push out in the month of October, and then really start to gravitate to the downside, right? Depending on the crisis. But I've covered Nasdaq again in a small video. So I really hope you guys are watching these small videos. Because if you look at Nasdaq, so we're talking about the month of September right now. And then I did something very similar. Let's go find September last year, September, October last year. This is September last year. Red candle, October, red candle. September 2020, red candle. Let's go find September 2021. It's literally there, guys, in the game. This is the last dip of every year, right? I mean, I'm talking crisis now, but there's a potential that this crisis might just be a nice way to buy a dip. That's what smart money does all the time. August 2019, look at a doji candle for September, right? Literally indecision to dip enough. The problem is they dipped already in August and there was like a range, basically. Nasdaq froze from May 2019 all the way to September. So October, markets don't gain value. They don't even close above the August candle, but at least in October, it gets better. And then the real dip comes because of COVID. That's 2019. Let's go to 2018. Yeah, we're starting to get the point. There it is, 2018, September, October, red, which created a dip into the end of the year, December 2018. Look at this. We could get something like this. This is very realistic. This is also very realistic right now, September, October, or a nice long-term dip. That's 2018. You with me? No panic in the markets. Let them panic by themselves. No panic in the market. September 2016. You see this red market, flat line in October. Wait, sorry, this is September, October, red market, flat line. And then it bought the dip. September, October is used for dipping the markets. It feels real and emotional because we're only trading it now. It's our first time, if those of you who are trading for the first time. So everything is panic, panic, panic. The news is all over the place. And again, there is a real crisis. But in general, this is now 2015, red September, right? The dip started in August. So August, September, 2 months of dipping. Look at this, bought it out. Then December, we dip again. And then we rally out, right? 2015, we're back testing our hypothesis because we have nothing else to lose from that. There we go, 2014, September, another red month. Today is the last day of September, right? Nasdaq, historically, September is a red month. The difference today is if it gives us a bearish engulfing pattern, then we might be worried. We're not sure what's coming. There's the next candle here, September 2013. Okay, that's July 2013, August. So the red candles in August, right? Mini dip from there to there and markets rally. So 2013 might have been a good year, kind of, right? Because the dip clearly was slightly more insufferable. So October 2012, massive red candle. The buy momentum gets killed in September of 2012, and a bearish engulfing pattern comes. Markets flatline for 2 months. They bought the dip. we are in the creation of a dip. Okay, that's it, guys. That's the only way I need you to think about Nasdaq right now. So if you keep trying to buy it, you don't have a sound way to buy it. And I know, Mr. Ronald, that's not even your problem right now. You're not trying to buy it. You're a diversified trader. I know you're trying to catch yourself. I'm going to come to you right now. September 2011, right? Dip, 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 consolidation, dip, 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 buy the dip, dip, boom, right? And my candlesticks are zoomed in. If you really look at it, guys, these are real dips, right? If you really position your chart correctly, like I mean, right now it was just flat bit because I wanted you to see it carefully. But if you really look at these dips, this is like literally markets finding the lows, massive, massive, massive rejections going down, making contact with all the supplies, bullish engulfing patterns, etc., etc. 2011. I'm going to stop in 2010, guys. I'm going to stop in 2010 because I need to keep the videos short. October 2009, in the financial market crisis of 2008, the financial market crisis of 2008, 2009, Nasdaq was still a buy profile asset. It dipped in October just for 1 month, and then that was the demand that held price throughout the crisis. That is to say, when the banking crisis came, smart money destroyed the markets. It was a housing crisis, like the Evergrande crisis right now, destroyed the markets and used this as the bedrock to hold price February the following year, July the following year, and price never came back. This is literally the tipping point of the crisis. This is Nasdaq. So Nasdaq will first feel a crisis. So 2018 September, do you see that? Do you see we've got a bearish engulfing pattern? Now I keep telling you guys, Evergrande is like 2008, but only on steroids. So now this is where I want us to be. This is actually quite nice. If you'll allow me to just go on for another 10 minutes. Nasdaq, 2008. Look at your September candle. I've already proven to you that September, October, right, is a dipping month. I've done a good job proving this, guys. I mean, it's in our charts. But look at this. Again, we got a PCP that was already confirming. So there was already that 2008 crisis, right, that started in March. Right, so Nasdaq took a hit, tried to recover, but markets couldn't handle. In September, the rally then really took off. So if we start to draw some zones, we'll go 1, 2, say this is not the best supply. It's not the best supply. So let's not even lie to ourselves. Right? This is a very good supply. So the best supply, right? So this is like the media is talking about it. You're starting to see fear, panic in the markets. Markets panic in January 2008, February, it's bad. But then what do? Smart money pushes price up before the prepared sale. This is when smart money was realizing how bad the situation is. Not that they know, they're going to create a scenario where market conditions allow price to go up so they can really sell the crap out of it. No one wants to sell down here when you can sell up there. Then they create a real supply. That supply is retested. Here's your September candle, blood, boom, right? For a full financial quarter, because banks think in 3 months, take profits in 1 year, in a 10-year plan. But you guys know this already. So for a full financial quarter, it's just red, consolidation, and then a massive recovery, right? So from September 2008 to October 2009, markets are within its 1 year range, okay? Dip. So I'm saying to you, Evergrande might give us this scenario. And it's all based on what candle we're going to get at midnight tonight. Or it was all based on how much fear is going to be pumped in, but also statistically speaking, the fundamentals on Evergrande are terrible, right? If they're not going to make their payments, which looks like they're not going to make their payments, and China is not interested in bailing out a failed capitalist company if China itself is a communist, self-proclaimed communist party. What China would do is, for me, and it's just speculation right now, I think China is going to pay out the Chinese bonds owed, but not the dollar bonds, and it owes a lot of US dollar bonds. So it's going to fix what will affect its own currency, but it's going to let Evergrande drown in its poop when it comes to USD bonds. Now, 27th of September, Mr. Marx is asking us, the spike was crazy. Sir, what time frame did you start off with? If I look on the daily, here's the 27th, right? If I look on the daily, that's the 27th here. Now I'm looking at this chart now. I'm not in any of these trades. I told you guys in the war room on Sunday, do not buy Nasdaq. I did say there was only one potential buy somewhere down here. It was like a yellow zone, and it was this spike here. But then, honestly speaking, to the war room, there was like a whole yellow zone here. And I say this is the only time I'll be willing to buy Nasdaq. And then my Nasdaq came, and that's what caused a 4-day buy rally, which is obviously a lot of money. But outside of that, there was no real buy. And even that buy for me was quite risky, and it was sold out anyway. So if you took profit there, good for you. But this is where we are. So we bought here the other week, right? We stopped buying there. Now we've got a drop, and our drop gives us a big enough imbalance. Then we've got Talitha areas. That's the first thing I'm seeing on this chart. We've got Talitha areas here. We've got markets ranging, and then we've got a substantial drop. Massive volume, literally massive volume. If this was your reasonable body of where price turned, right? That's your reasonable body. Then technically speaking, I know it's not a perfect bearish engulfing candle, but technically speaking, there's a lot of volume. But in any case, on the daily time frame, we have a market range. We have a simple, clean market range. Right, there we go. That's what I'm seeing on Nasdaq. I wasn't in the sell. This has been a terrible week for me in terms of trading. I've literally just been focused on the wealth to three years program and obviously investor reporting based on the Evergrande crisis. And my deadline is, well, my last meeting is tonight or this afternoon, sorry. And then wealth in 3 years starts tomorrow. So I've just been busy, but to me, that's a perfect sell. To me, that is absolutely a perfect sell. It literally came to 15,400. All you needed to have was at least 25 pips just outside. It has literally arrived at a specific area of value. And maybe the idea is, number one, you can't afford the whole area, or you don't want to risk for this. 18 points from a 365 number. All right, just 18 points away. You wouldn't have known that, right? Let's see what would have happened. So on the daily time frame, you'd be stuck with this. You'd be stuck with this entire area of value. So your account size would have to be okay with first waiting for price to be confirmed. So you're looking at risking about 155 points on Nasdaq. Depending on your account and your lot size, maybe it's doable. If not, let's go to H4. So this is literally where markets came into. So if you so maybe you're talking about this H4 supply. So you're wondering why the H4 supply didn't work. I'm just assuming that might have been the problem, right? I'm assuming you're looking at this H4 supply, which is beautiful, right? But on the 27th, where's the 27th? So this is the 27th midnight starts here, right? So now if that's, let's say you are saying you couldn't have caught that trade on the H4 time frame, right? Yes, last night I was talking to the previous class about this kind of stuff. We're in a crisis, but in general, not even in a crisis, stick to the day. The H4 time frame is flawed. It's a PCP. Okay, it's a bearish engulfing, but you know, it's got the PCP making. It's not a peak bearish engulfing. It's a drop-based drop, right? A typical classic supply, but it's a good enough supply. It gave price a day to sell, and then markets broke it. Markets broke this H4 supply on the 23rd of September. So I wouldn't even have bothered trying to sell here, because on the 23rd of September, I knew for a fact there was no supply. If you think about it, it's the FOMC's meeting on the 22nd of September, the day before, that hit this supply, weakened it, right, rallied it, and then markets dropped literally there on the 23rd of September. So on the 27th of September, you don't have a supply on the H4 time frame. Markets drop and rally and they turn in here. You might not have a perfect entry on the H4 supply, but this can't be it. I honestly don't think this will be it. So for me, again, a clean take on the daily would have been the better trade. So a 400, 500 US dollar count could handle it. But this is the 27th of September, right? Markets rallied into that area of value at about 3 a.m. I was blissfully asleep. I just want to see if there's anything, if anyone who was more detailed, even on the 1 hour time frame, would have to be a very old school supply and demand trader, all right? Which I need to start maybe elaborating a lot on. I just don't trade it because I hate it so much, right? Where a broken demand becomes a previous area of value of testing. So one of the guys who taught me a long time ago, he used to keep all his zones in, including the broken zones. Because after we trade supply and demand, he would say retail traders might perceive that as a resistance point. Number one, smart money might perceive that as a point of interest, right? So look at this carefully. There's a demand, price rallies, markets break it. You don't want to buy here anymore because markets have broken it. But to break a demand, you need a lot of supply. That's the basic thesis. You need a lot of sell pressure. So if you create a lot of sell pressure to break a demand, when markets return there, it's our version of a resistance, and that's what it works on. But let's say because I don't really like teaching around that kind of stuff, because it's got a 60% win rate. It works, but not all the time. Right? It's not like our fresh touch retest. But let's say you didn't know about that. I would still assume no, there was no trade to take on H1 or H4, because the H4 area of value was broken on the 27th. The only trade to take was the daily. Now, let's say you missed the daily, right? Which it seems like a lot of us did, which is fine, right? But I did say it's a crisis, sell, right? So let's say you missed the daily. There was 2 other entries to take. So this is price now. It's given us a clean bearish engulfing. So we now know the trend of the day is on the downside. On the H4 time frame, as this is happening, the first one is here, Talitha area. Markets are waiting for here, right? Markets didn't come back, so we're not back in. Okay, that's 1. 2 is what's going on right now. Bearish engulfing pattern on this lower H4 time frame here. This is what's gonna if buyers are easily slowed down on this H4 supply as I speak right now, this is a problem, because the markets then will never get their wick. Remember, price needs to close above 1500, which is here, before midnight tonight, so that that bearish engulfing candle is eliminated, right? So I won't be selling here. Here it's way too low on the curve, right? This is probably like one of those PCP levels. If you draw your Fibonacci, there you go, 0.38, 0.236. I have no interest in that type of I would rather take my chances up here, but I'm not going to take my chances up here. If the buyers leave this zone today, rushing, like so straight green candles, and it's almost parabolic, like you're looking at Bitcoin rally, I'm not going to take the trade, guys. Please, for all supplies and demands, in case I don't see you guys or talk to you guys as often as we need to talk, whatever, this is how you want price to come to an area of value. You want to see accumulation. You want to see price trade sideways. You want it to explode. You want it to take its time. The more it takes its time, the more orders are built, the anticipation. It's like foreplay, right? And when price finally gets into that area of value, you can trust that area of value. An area where price comes bullish like this, it means smart money is putting way too many. So you get one green candle there, and the next one is right there, and the next one is right there. There's not much sideways movement. Markets have put in a lot of bullish momentum. That supply will break, right? So I'm taking a sell here only there if it makes sense, if markets come nicely to this area of value. So something like that, even if there's a straight one, then there's some sideways there, etc., before making their way there. I want to sell to something that looks like this, right? And then find our next target. So I have to stop the video here, guys. So look at this accumulation, two parabolic, straight, take this out easily, right? So we want some type of sideways momentum, right? Mr. Marks, hope you're good. Oh no, you also asked for gold. Right, so if dollar is strong, gold falls. You guys know the rules. If dollar is strong, gold should generally fall. Right, but if things are bad, sometimes gold is a safe haven, right? And smart money will decide between using gold or dollar or both as a safe haven. Here's the 27th, right? So remember, I have to go back to what you were looking at the charts at the time of the charts. So the 27th, all right? So did you try and buy? I'm assuming you tried to buy. Like gold is sitting at a governing demand. The last I checked, as far as I know, right? Number one. Number two, this governing demand has been revisited, right? So now we're starting to wonder, gold, are you going to do what DOA asked you to do a long time ago, which is to come back to 1.5? If gold comes down here, I told you on everything, I'm liquidating about 40% of all my trading accounts just to buy gold EFTs, gold coins, whatever gold there is in the world for long-term investments, right? So inside here is gold. So gold is still like got a very intact demand, right, at play. Okay, go to weekly. Hidden demand, right? So let's talk about this stuff, because I don't know if you guys know this stuff. You don't, okay, you don't know this stuff because you haven't seen the module 3 yet, right? But these are called market inefficiencies. So when you got a long wick like this, 9 out of 10 times, it needs to get filled. It has to get filled. You see this wick there? Markets have to fill long wicks normally, right? All these wicks here, there to there, there'll always be a nice candle to close that, right? Market inefficiencies. Gold is closing a market inefficiency right now, but you're only learning that today. Let's say you're only learning that today. So what do you know about gold? Gold made contact with the demand for the, I don't know, couple of times now. Remember, the whole red area is our governing demand, right? So gold is playing a mind game with this demand. It keeps hitting it, and we're going to slowly but surely start to lose faith in it, right? Slowly but surely we're going to start to lose faith in it, number one. Number two, when it comes to weekly demands, gold has also done a number on its own weekly demand. Beautiful imbalance, came back in, used up the money to retrace back into a monthly supply. My yellow zone is a monthly supply. There we go. So H4. Oh man, I'm enjoying doing this stuff. Guys, give me questions in the private Telegram group, and I'm happy to spend 1 hour in the mornings. So you ask your questions today, I answer them the next day, not on the same day. Fundamentally, because right now I started this whole Q&A thing late, so London session is about to start, but it's okay. I'm not trading today. I've got a big meeting in the afternoon anyways. So where were we? We were on the weekly time frame, right? So this is gold, right? So already we know that this weekly area of value is a fail, right? Trying to buy here is really like trying to vote for the ANC and hoping they'll change, right? You know, maybe they'll get a tender, right? Maybe some corrupt politician will give you some money, but it won't fix the greater economy, right? So this is for me, I know we're inside a monthly demand, but I'm starting to see some weakness, right? So for me, I'm like, oh, okay, cool. And we also know for a fact that in the background, the FOMC has become hawkish on the dollar, which means we're going to get a strong dollar. When we get a strong dollar, we don't need gold. Dollar is the vehicle. It is the investor vehicle. So if dollar is strong, gold must fall. Gold is falling because dollar is strong. That's why in every war room, I never start my night start looking at my DXY chart. It controls most of these currencies. Look at your dollar. Your dollar has taken out 2 demands in 72 hours. 2 supplies, sorry. Supply 1, this one here, bearish engulfing pattern, taken out, boom, dead. Supply 2 was already at glass effect, taken out, boom, dead. Supply 3, the big supply, big daddy supply. This supply was holding price down for a very long time, taken out. There is nothing in the way. If dollar crosses this line, you see my notes here, bulls in charge after 95 bucks. What? So, and someone asked me in last night's class, Leroy, what do you mean by prices in everything? I think it was Daisy from Kenya. If you're watching this, remember, this is it. This is it. Markets are pricing in a stronger bullish move. Remember, FOMC meeting is here. Now we've got this 365 candle looking silly. Now, it was a bearish engulfing the next day. Now it's a 365 candle. And now we have an imbalance. So when markets get, let's say we get a bad NFP. Let's say we get a good NFP. Let's say we get a good NFP, good CPI. Markets won't even bother to come back down. They're just going to keep going up, right? So whoever is buying low here is already thinking, man, I better buy the dollar now before the dollar is at 95, right? FOMC is on the 4th of November. I've only got 1 more month to go. I'm going to get in. So I know markets are going to retrace at some point, right? 4th of November is literally 4 weeks away. Markets are going to price in this. If we're seeing all of this happen, I'm going to put back all my levels because I need to explain the same thing on Sunday at the war room. Then gold makes sense. Gold is a dead sale. But again, Mr. Miles, I'm not sure if you're trying to buy or sell. I'm just assuming that because the only thing that didn't work there is a buy. But again, rightfully so, right? So that's what I'm trying to say. Rightfully so. We would not be trying to buy. Like, I haven't seen anything too crazy, guys, in the markets. I mean, I saw you guys' comments about how markets have been wild. I personally haven't seen anything too ridiculously outside our textbooks. It's just maybe a point to kind of like realign it. So we've got weekly on top of daily now, and it's starting to get a bit blurry, right? So we know that this long week smoked whatever was here on the other side, weakened all this stuff, this double bottom, retail traders have all sorts of patterns that they love to trade and all that kind of stuff. So all these demands, this whole area here is in trouble. If it's in trouble, then I expect nothing. And then I just explained to you that the market inefficiency. So if price wants to fill this week, it's going to fill this week. And I think it does, right? So for daily, I'm not even interested, right? So this is nice. This is nice, right? These are all real levels to look at for selling, not for buying. I expect this to happen. So I genuinely, honestly, guys, And that's why when people say, look, I can't get access to the remote course, I jump on that because I know that's important. That's more important than trading, right? Revisiting my lectures, revisiting the rules, revisiting your adjusted trade plans, et cetera, asking questions like this. I promise you, if the questions keep coming, I will keep responding. Right, thank you so much. I want to keep this nice and short for you guys. I will be back to answer pound pairs and Takakoma's question.